We raised capital for MarketReader in Q4, and we did have discussions with some VCs about how to place the proceeds, right? And I've navigated financial crisis in the past when I was at Goldman and so forth, right? So I thought the safest thing to do was to buy T-bills for the proceeds that we had. And we had some VCs that opined, not our investors to be clear, that was too risky. So they thought just bank deposit was a bad idea. So we definitely had a shakeup in how people think about risk, and we're going back to good old basics. The T-bills is probably pretty safe relative to bank deposits, and that's a lesson a lot of people have learned over the last few days. It's not really surprising that there's certain bank entities that are struggling to manage like the interest rate risk. It is extraordinary that how little hedging seems to have been done in some of these portfolios, right? Literally just keep an open exposure. I find that just very hard to comprehend that has taken place. But interest rate risk is for real, right? And I will also make the point, in the context of the moves you're seeing today, right? So we are pricing in rate cuts. Like half an hour ago, we were pricing in rate cuts for May, right? So a week ago, we were expecting 50 basis points for the March meeting and then hikes in May, July, and so forth, right? And now we're pricing cuts in either it changes every 10 minutes, May or June, right? But it's a huge change.
Is that way off base though, Jens?
I think the point I would make is that in the past, we've had a situation where inflation was close to target. And as soon as we had financial instability, the Fed focused on that because there was not really a big inflation problem, right? The question is, can they actually do this on this occasion with inflation running way above target? Can they just say, oh, we don't care so much about the inflation target, we're going to cut rates because there's a little bit of financial instability or a lot of financial instability? It's a much trickier decision than we've had in the past because the inflation dimension is totally different from past cycles.